Right, what's happening, guys? So it's me again, DJD FOREX. And I'm quite excited about today's move because I was literally talking about draws on liquidity yesterday. And knowing when the move is done after the draws have been taken out. And I literally got like a textbook um, set up today, which was just like really good, like a really good coincidence for literally the message I was preaching. I'm going to explain the move. I'm going to go from top down just to give you a bit of context. Yeah, so let me just quickly start from the higher time frame. I mean, this price action here is pretty much self-explanatory what's going on here. But let me just quickly jump onto the higher time frame just to give a bit of context as to why I was still happy to take buys. All right, so just basically looking at what we've got here, we've got a daily fair value gap, right? So we're trading above that. We could draw into it. This is a strong draw on liquidity, and it also is the 2 weeks point of control and equilibrium here that hasn't been tapped into. So we do have some strong draws to the downside, but based on price action on the timeframes that I trade, I was pretty happy to trade from this block here. So I'm going to just get onto the time frame that gives us the play. And also another thing, right? Using our volume tool, we can see that there was a lot of volume here. So if we're trading above all of this, oops, let's get that section. Let's just get that on. All right, perfect. So if we're trading above this point of control, I'm still happy to take buys. When we break down this, which is, so if we was to come and take out, say, this low here, this is my protected low, my most recent low. If we was to break this, I would then be looking at sells into some of these draws down here. 50% of this swing, which is here, maybe into here, all unmitigated. We've got some low risk and liquidity there. Loads of reasons to come down, but I'm still bullish until we break this, basically. All right, so let's just get back onto the time frame that we're going to trade from. So I caught this on my 500K stack with Top Step. So I've got 5 times 100K accounts all stacked in a copy trader. I've taken it kind of slow in December. I didn't really want to make too many mistakes, so I haven't really traded much. Plus, I was on holiday, and I was hoping to trade on holiday, but the setups just weren't there. So it was a little bit of a annoying situation because I really wanted to trade quite heavy and pass the whole 500K with Top Step, but it didn't work out like that. And then when I got back, I was super busy with work, so just really didn't get a chance to trade much in December. And then as we got later into December, it just came off the charts anyway because I just thought I'll leave it because there's low volume. But to be honest with you, there's been quite a lot of easy plays, like really easy reads, which I've been doing breakdowns because I just want to stay active in the market. I'm here every day looking at it, but I'm just not trading it. But today I fancied it. So, right. And plus, it's Tuesday. So I left it yesterday because of it being Monday, but it was quite a clean play. And because I was a little bit like, that was an easy play, but it was Monday yesterday, so I kind of left it. But today I was like, yeah, Tuesday, I'm gonna have a little go. All right, cool. So if you've been following me, I use something called a BME cycle as my market structure to understand where I am in the swing or the move. And this is basically what I'm looking for here to give me my direction on the medium time frame. So I use, this is my little tool. It just gives me the 50% mark of this downswing before the break of structure, right? So just looking at what we've got here, it doesn't always look perfect, but it's just that there's certain characteristics of this BME cycle that basically have to be met for it to basically not 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 necessarily be identified as a BME cycle, but basically in a swing, the characteristics are all the same. They just don't look the same. So they never look perfect like this, but this is basically what I'm expecting. So from here, I was kind of expecting price to, I mean, not shoot out of there, but give us something. We didn't even take out the previous day's high, but we still got something. So I'll jump into it and explain why I took my trade and what I saw. But I'll start from the most recent BME cycle. So we're going to go from this low, so that high down to this low, and then up, right? So that's our break of structure, right? That's the beginning of the move. This was Tuesday's Asia low, which never got taken out. So this created some nice liquidity for us. Price kept going up here, broke structure here, it came down. And then basically, as this has come down, this was, I believe, Monday, you've taken out the Asia low of this day. You've taken out the liquidity underneath this swing here, right? So you've got quite a lot of reason for price to basically make a move up. Also, we mitigated into the 50% of this swing down, right? So for me, like the bottom is in. So for now, for me, it's just basically, can I catch something that's going to take us out of here? So this is this point here. Basically, now I'm just looking for that extension there. So couple of characteristics of the BME cycle, right, is that there needs to be liquidity for the fuel for the move up. So basically, this Asia low here was good. This bit of liquidity underneath here, under this swing, the 50% of this mitigation zone would basically give me confidence that basically the bottom's in and now we're looking for buys to take it higher. Right, now getting down onto the smaller time frames, because I'm looking for buys, I'm just looking for a play to take us higher. Now, there was so much liquidity that was just asking to be swept, and then when it did, it shot up. So the first thing I'm going to do again is break down a smaller time frame BME cycle, which is, I can see it already, it's there, right? But the BME cycle starts after a sweep and then a break of structure. So if you can see all of this liquidity here, price pushed down, swept all of that, and then pushed out of here and broke structure. So that's already our push down before breaking out of there, right? So I'm not going to count. We can do that. Okay, and then back in, right? Now notice how this swing low didn't take out this swing low. So now we've got some low resting liquidity here. So this becomes a target for price, which literally got swept there, right? So can you see what's happening on the left here is basically giving us fuel over here for the move up. Okay, so we broke structure, we're out of there. Now all of this is literally pre-market Asia liquidity range, right? So all of this is just liquidity. So this is all nice because we need some fuel for the move up. Now, it didn't really extend out of there, but it gave us something, which I'll break down this bit of price action here. But there's the sweep and there's the push. All right. Targeting previous day high, Asia high, trend line liquidity. So loads of reasons for price to push up. Plus, one thing to take note of is that, see this red line here, this dotted red line, this is the point of control for yesterday. So the fact that we're trading above it and holding it shows that basically there's like pretty much support there and price seems to want to hold off of this level. So I want to just make sure that this held. I would have been looking for buys. So at the open when price did all this, let's just cut this out. So say, so this is what I was looking at before the market opened, right? I marked out this nice trend line liquidity here. I've got the Asia high here. I've got the previous day high here. I was happy to take any buy when price opened from anywhere underneath here as long as it didn't break this. So this could have gone all the way down to there and then shot up to there. And I'd have been happy with that. But if it had shot up first, if it had gone up first and taken out that, I would have been looking maybe for a sell to go lower into the draws that we've got down here. But it didn't do that. It did exactly what I wanted it to do. It basically swept this low and then shot up. So we marked out our draws and liquidity. Obviously we had the Asia low here as well. And then when price opened up, it swept that. It didn't really get even any more further than pretty much just here before it went up. So we've got these stacked lows, loads of fuel there. Loads of fuel. And we could have taken a buy from anywhere above this line, basically. So as long as that didn't get taken out, we would have been sweet. Right now, another confluence, right? This is something that I use, not all the time, but just rarely, sometimes, is the first 5-minute candle. I mark out the high and the low, and I wait for price to sweep one of these before it heads to the other, because basically when the market opens, the first 5 minutes, there's a lot of back and forth with buyers and sellers. So it creates a lot of liquidity above this area, right? So these become draws on liquidity. So the market opened here. Make this line orange. And I just waited for the first 5 minutes before I put an orange line across. The fact that price came down, swept the low, and took out the Asian low, mitigated the 50% of our mitigation zone, which is here. After this swing, the 50% is here. Like just stacked lows, stacked liquidity just here. The fact that price has come down here, I was then now thinking, right, well, a trade into this drawn liquidity up here, trend line, Asia high, and previous day high is like super probable that we're potentially going to go up. So again, all I was looking for once this got swept was just now a play trading up towards these draws on liquidity. And again, so I use structure to get there. I did have to go onto the 15-second chart. In some of my other videos, I said I don't like to go onto the 15-second chart, but sometimes you have to. So all I was looking for was the sweep of, so basically the sweep of this candle, right, which we got there, down there, right, it kept going, right. Push down and then massive displacement. This big candle here created a big gap. It engulfed all of this, this is called displacement. So this lets you know the institutional money is here, right? Pushing this up because it's a big order. Now, price didn't even mitigate 50% of this in this leg before I entered. We've got the break of structure, price pushed back in, created liquidity probably for this move. But again, something that I was speaking about in the previous video yesterday is that once my draws on liquidity have been taken out, I'm done. Yesterday's video was a similar play where we got a sweep and a push, and then price came back to this area and then just consolidated. And that happens all the time. So when I saw this happening, I was like, yeah, literally what I was talking about yesterday has happened again today. But there was a secondary push, but I wouldn't have been in this. Once I got my push up to here and the Asia high, I was done, I was out. So yeah, let's just quickly go through this. So again, it's the same thing. We're creating now the mitigation zone that basically gave that the fuel. But when I got the displacement over all of these candles here and a big fair value gap created, I entered my trade. I think, do you know what, I think on the close of that, I entered somewhere around here. Stop loss went underneath there. And I literally took it just to the high of the 5-minute open candle, which was there, or maybe a little bit higher. But I think I risked $400 to make $400, so I only caught a 1-to-1 R. But for me, it was quite a textbook play, and I was quite happy because yesterday I saw something similar happening, but I left it because it was Monday. So yeah, literally textbook. And again, once the draws have been taken out, I'm not really trying to get into this because you would have just been in this chop, just chopping around, like sweeping. Like, where would you have put your stop loss? All right, fair enough. You could have maybe, if say you caught this trade here, say you caught that trade and you put your stop loss underneath there, fine. That is now the new protected low. But all of this chop is just, it's not nice for you to maybe get that. Fair enough. It did go up and it did take out, well, it tried to get up there to the previous day high, but it didn't quite. I mean, it was definitely a nice push. How many points? 100 points. But if you look at yesterday, we had a similar scenario and it just chopped. It did the same thing. So yesterday, market opened, shot up, came back down, and then, all right, got one more push and then chop. Do you know what I mean? So it's just, okay, fine. Towards the end of the session, it got another push, but yeah, not for me. Once that had swept the Asia low and then pushed up and taken out Asia high, I knew the move was done. So pretty much draw a line here. And this is something that basically boosted my profitability, is knowing when the draws of liquidity have been taken out and it's all done and leaving the market alone. If the move happened pre-market and the draws and liquidity are gone, just leave it alone. You don't have to always participate in the market. You're better off just waiting for something clean. So yeah, after this, the move is done. So as you can see, like, this is literally like, okay, the first hour, first 45 minutes, right? That's the highest probability move because that's when all the volatility is. So this was obviously the trade. If you actually look at what's happening, it's literally creating the BME cycle again. So I'll draw it for you one more time. Sweep, break out of there, liquidity, bang, more liquidity up to here. All of this coming down. I guess all this chop counts as just, chilling, and then push out of there and break the high. Fair enough. It did do it. But like I said, I'm not trying to get involved in all that chop. That's where I blow accounts. I can have a 2-week, 3-week win streak. I even had whole of July clean streak, not one loss. And then one day of chop, and I'll blow an account trying to trade one way, then trying to take it the other way. And I just sometimes just think, what the hell am I doing? At this level, I've been doing this for so long and I'm still just literally getting chopped up. But a lot of it was because the draw and liquidity is done. Like, there's no fuel. There's nothing that price wants to take out. So as simple as that, guys. Like, that literally was a really good example based on what I was talking about in yesterday's video. So I did put a link to yesterday's video on my Instagram so you can have a look at it. But yeah, 29th. So if you want to go and have a look at what I was talking about yesterday, about basically just not getting caught up in chop to save your accounts and make your P&L look a bit better, have a look at that one as well. But yeah, apart from that, guys, that's it for me. And yeah, I'll catch you on the next video.